What's often missed by the cryptocurrency is going to die broken record media. That is after the next wave of regulation. Wall Street is showing up to the party with their locked up capital. That's tens of trillions of dollars entering the space eventually. Future is bright. This quote was lifted right out of a tweet by Charles Hoskinson, the genius founder of ADA and ex-founder of Ethereum. In today's video, we're going to be taking a look at Cardano in a different perspective. We're going to be looking at Wall Street's involvement in crypto and why Cardano could be the next point of target. We're also going to be exploring all the patterns from past and present, and see what the future looks like for ADA and the prying eyes of Wall Street investors. Hi guys, welcome back to another video on Investing Guide. If you're new here, a sub to the channel would go a long way in supporting us. Also make sure you stick around until the end so you don't miss out on how Cardano may manage to pull the attention of Wall Street investors. Let's kick things off with a quick track back. The major reason cryptocurrency has taken so long to become generally accepted is the number of uncertainties that surround it. However, it is common knowledge that a large percentage of these uncertainties that surround the progress of the crypto market are a result of regulatory problems. All over the world, there is always a general deadlock whenever the conversation of regulation for crypto arises. Of all the nations in the world, only Thailand and South Korea have been able to show some form of progress on how they intend to regulate cryptocurrencies. Using its SEC, Thailand has given the green light on 7 different cryptocurrencies that can be legally traded in the country, and also gave solid ICO guidelines. As for South Korea, on the other hand, the governing bodies have already started working on regulating the exchange of cryptocurrencies in about the same way they regulate commercial banks. After a long wait, the American SEC finally came out with substantial guidelines on cryptocurrencies, the crypto exchanges, and of course ICOs. Right now, the only clear pathway the SEC has been able to sign off on, however, is for Ethereum, stating publicly that it is not a security. While the crypto market has never been smooth water to sail, its relative stability is highly dependent on how soon the authorities can implement proper regulations. This, however, ties us back to a tweet by Charles Hoskinson that we quoted at the start of the video. This tweet was made way back in 2018 when the acceptance of cryptocurrencies was even lower. However, after the founder of ADA and co-founder of Ethereum considered the prospect of crypto in the future, he was quite certain about the influence and entry of institutional investors once all the regulations had been well laid out. It is quite obvious that Wall Street is pretty interested in the crypto market. Furthermore, by the time Wall Street throws in free capital, the entire crypto market is sure to experience a big boost and soar to levels that crypto enthusiasts could have only dreamed of. Let's now zoom into Cardano. While the entire crypto space is sure to benefit from the involvement of Wall Street, Cardano may be the coin in the running for top priority for the investor. About every time the crypto world goes into a bearish period, most altcoins suffer a deadly hit to the head. For the top dogs like Bitcoin and Ethereum, the decline in value is usually the biggest, and then the other coins follow suit. However, with Cardano, the story has been more wins than losses in 2021. Cardano ADA is currently the 5th largest digital asset on the market and has shown over time that it does deserve this spot. Between October 2020 and July 2021, Cardano's value has gone up by a mind-blowing 2,276%. The market has experienced a lot of dips in this period. In the latest dip, the asset dropped by just 40% in value. To place this percentage in a little more context, Ethereum, which was considered the second biggest cryptocurrency in the world, has declined by more significant figures since the market crash in May 2021. To make things a bit more interesting, a few days after the May 19th crash, Cardano was at the top of the list of CoinShares' weekly digital asset fund flow report. In the weekly digital asset fund report, CoinShare claimed that Cardano had raked in its highest inflow of $10 million. Bitcoin, on the other hand, had seen a mighty outflow of $111 million. In the period that the report was gathered, the entire crypto industry recorded huge outflows. Notwithstanding, in all the outflow chaos, Cardano squeezed in inflows of $10 million. The report by CoinShares stated that the figures that were recorded were a result of investors actively choosing proof-of-stake coins based on environmental considerations. The 21st century came with a worldwide awakening to environmental issues. The discourse has been able to take hold of the cryptocurrency world, as a lot of concerned parties have reservations about the environmental effect of mining the coins. The 24th of May report marked the second week in a row that ADA recorded such concrete inflows amidst other coins perishing. The preceding report from the 17th of May 2021 showed that Cardano came home with a whopping $6 million inflow. If you're still not clear on why Wall Street may be going big on ADA, you should know that Cardano has managed to steadily hold on to the $1 range. And in the crypto world, steady isn't a very common word. With the bearish period gradually passing over the market, Cardano is definitely set to get back on track in the next few weeks. But Cardano is still the biggest crypto coin in the world. Why is Wall Street then heading for ADA instead? While Bitcoin may still get some attention for its already concrete reputation, ADA has shown more signs of sustainability than most coins on the market right now. Between the May 17th and May 24th reports by CoinShares, Bitcoin recorded extreme outflow values for the 2 weeks straight. In the first report, Bitcoin experienced outflows of $115 million in total. In the second report, Bitcoin's outflow was recorded at $111 million. Having an outflow of over $100 million for 2 weeks straight is not a good sign at all for the coin, and the Wall Street investors will be taking notes of these figures. So, while the reputation that Bitcoin has been able to build over time may play a role in how it is influenced by Wall Street's involvement in the crypto market, the figures so far are not in BTC's favor. With that being said, let's get straight back to what Cardano's future looks like with the wolves of Wall Street. In the first few weeks of July, Grayscale announced that it had added Cardano to its large cap fund. Cardano shares this table with the likes of Bitcoin and Ethereum. Becoming a part of this fund now makes Cardano the third largest asset in the fund, with a 4.26% allocation. What does the Grayscale announcement mean for Cardano? Well, this one's an easy question. It is a very big deal for ADA because it now creates an opening for direct access to accredited investors who are interested in the project. A noteworthy fact is that Grayscale has already filed for a Cardano trust since January 2021. However, they waited until now to include the coin in its large cap funds. As we mentioned earlier, the world is now more environmentally conscientious, and a lot of ESG debates are now blazing all around Bitcoin. With that in mind, most investors are now turning their attention over to proof-of-stake assets. Since the crash in May 2021, Cardano has recorded $11 million in capital inflows from institutional assets alone. As for the giant of the crypto market, Bitcoin, it has recorded a massive capital outflow of $115 million. This, therefore, explains that most of the institutions have been looking closely at Cardano even before Grayscale made it accessible. Another big point for the Wall Street gods looking down at Cardano is their first ever Plutus smart contract. This contract could set Cardano right on its way to signing top partnerships. Cardano just released Plutus on its Alonzo testnet. However, more developments will be implemented on the contract by the time we are in August 2021. Incorporating smart contracts in all their functionality and glory will mean that creation of dApps will soon be available on the Cardano network. What this means is that the very domain that got Ethereum to its top spot valuation will now be something you can program on Cardano. This, in turn, increases the project's state of utility. With Wall Street aggressively flooding the crypto space, we may be in for a public allocation on Cardano in the near future. And with that, we've come to the end of today's video. One thing the crypto market has taught us is that there are absolutely no absolute answers. Will Wall Street throw all its weight behind ADA? We're just gonna have to wait and see how it all plays out. Let us know your thoughts in the comment section down below, and don't forget to smash a like on this video if it was helpful to you. If you'd like to stay up to date on anything and everything concerning this headline, make sure you subscribe to the channel and turn on post notifications for more videos in the future. See you then.